Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the afternoon of April 7th, that's a Thursday, 2016. And in this video, we're just going to take a quick look at gold and the gold stocks. And starting off here, we have a weekly bar chart of gold that you can see that includes the 80-week moving average. And also at the bottom, we have, which is our own data, the net speculative position in gold that we come up with as we divide the net speculative position against open interest. So that's a percentage figure there. Now, starting off, gold since the middle of February has basically been trading in a range from about 1200 to 1270, but most of the time it's been trading in a range of 1210 to 1270. And what we should note how weekly support at 1200 has held many times. Now, it was tested multiple times there in February. Gold was able to hold that level on a weekly basis. And again, we've seen that in the past 3 weeks where it looked like gold was coming close to breaking below 1200, perhaps testing that support at 1180 to 1190. It never did. So that first support line there, you can see just above 1200. Gold on a weekly basis has not come that close to breaking below 1200. And as I said, it's held above 1200 now when it's been tested on multiple occasions. So there looks to be strong support there at about 1210 on a weekly basis. And the confluence of support is really around 1180 to 1190. I mean, note the 80-week moving average. It is a little bit below 1180, but note how that looks like it's ready to start to slope higher. I mean, it's been sloping down for several years, and that's been key resistance. And so now that's going to be support. And so with respect to the price action of gold, if gold is able to move up and break out of this consolidation and break out and really continue to move to 1300 and above, then the next logical target is going to be around 1400. Looking at the weekly chart, that is the next strong target as far as a confluence of resistance. And now the concern might be, well, the net speculative position's at 43%. How's it going to get there? It's too high. Look, we've seen tons of articles talking about how gold's going to go down because of that. I mean, gold's forming a head and shoulders top. I don't know where people are getting that from. But back to the COT. As I've said in multiple times in recent videos, during the 2001 to 2012 period, the net speculative position often peaked around 50% to 60%. So again, I mean, the parameters adjust when you're in a bull market, and so a lot of people are looking at the COT and they're still applying bear market analysis to that. You have to change your thinking. Again, 50 to 60% for the COT, those were peaks during the bull years. If we're back in a bull now, you have to focus on that 50 to 60% level. So perhaps this net speculative position can get all the way up to 60%, and that will coincide with some kind of intermediate peak in gold at around 1400. I mean, that's just a thought. It's something to keep in mind. But it also wouldn't surprise me if gold stayed range bound for another 2 or 3 weeks and maybe the net speculative position comes down to 35% or so. That 43% was taken on last Tuesday, which was actually a recent peak in gold. So the data is taken on Tuesday and then you get it on Friday. So as of last Friday, the net speculative position was probably more likely to be around 40% than 43%. And still, look, it's not even, the net speculative position is still below the 2015 peak at the end of January, which was near 50%. So gold is holding support, and it looks to me like it's going to continue to hold support and move higher. And that's a strong target to keep in mind, 1400, perhaps in the next couple months. And look, another reason we're confident gold is going to continue to move higher is because the miners lead, and the miners really tend to outperform strongly early in a new bull cycle. and the miners are on the cusp of breaking out of their consolidations. Now, this is the weekly chart. On the daily chart, it doesn't look like they've broken out yet, and the miners gapped up today, so it's possible, if they're not ready to break out yet, that they could decline for a couple days and fill that gap. But whatever happens in the next couple days or next week or two, I do think the next big move here is going to be higher. This is a bullish consolidation, and look, the miners right now are in. This week has been, I mean, even though the weekly charts show that they're about to break out, I mean, this has been the 6th week of a consolidation for GDX and GDXJ. And if you go back and you look how many weeks they increased, it was 6 weeks. So 6 weeks up and now consolidating for 6 weeks, although it's a very bullish consolidation. They're consolidating and digesting the gains with a bullish bias, but still, that's 6 weeks they've basically been trading in this range and not breaking above resistance. Although, as long as they don't have a negative day tomorrow on Friday, they're going to be likely closing at new weekly highs for this move. And again, we showed you on the last chart, it's possible in the next couple months gold could go to 1400, and we haven't shown you the bull analog chart for gold, which we've shown you in recent videos. But remember, that also made a case for gold going to 1400 on this move. And so if gold is going to rise another $150, or what does that come out to? More, another 12% or whatever. I mean, if gold's going to rise that much more, you could see stocks rise, 30, 40, 50%. Maybe only 25%. I don't know. But you get the picture. If gold has that much upside, the miners are going to have a lot more upside. And look, I mean, there has been some doubt about whether gold's going to hold up here and go higher, and if 1200 or 1190 is going to be a floor. And so there's been some doubt that gold could go back down. And so this move could really change the perceptions of people out there that if gold does what we think it's going to do, then the perceptions of a lot of people out there are going to change, and people are going to have to start factoring in 1350, 1400 for gold, and not what they were factoring in 2 or 3 months ago, 1000, 1100. So that's what we see out there. The consolidation could continue for another week or two, but it looks like we're going to break out in the miners first. It's only a matter of time, and gold will lag, but gold will follow. That's all I have for today. Make sure you go to my website and get a free copy of my book, thedailygold.com/book. We're also going to have an updated report to the book that you will receive in the next week or two, so that's another reason to subscribe to my free newsletter and get the book. Again, you can go to thedailygold.com/book and opt in to get that. And you can follow more of my work at thedailygold.com. All my articles and videos are posted there. I have a lot of free stuff. I give samples of my premium service. And if you have any questions, thoughts, or feedback, feel free to email me, jordan@thedailygold.com. Thank you all so much for listening and watching, and I wish you all the best in the days and weeks ahead, and I look forward to speaking with you again soon.